In today's video, we'll delve into the top AI stocks to consider before Nvidia. Stick around until the end because there is a special bonus tip that could potentially boost your investment returns. So, before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Nvidia has been the artificial intelligence AI stock to own over the past year and a half. However, the expectations built into the stock are mind-boggling and could spell disaster in the future. Yet AI is here to stay, and if you're looking to invest in this sector, these stocks are worth considering before Nvidia. First up is Taiwan Semiconductor Manufacturing, NYSE, TSM. Taiwan Semiconductor makes many of the chips that go inside all the devices powering the incredible AI technology being used today. With Nvidia's GPUs being packed full of TSMC products, Taiwan Semiconductor is also benefiting from its performance. Another huge customer is Apple, which recently announced its AI offering was only available on the latest generation of phones. This could ignite a large refresh wave, benefiting Taiwan Semi immensely. Regardless, management projects AI-related revenue to grow at a 50% compound annual rate for the next 5 years, when it expects this segment to make up more than 20% of overall sales. Over the long term, management expects overall revenue growth of 15% to 20%, which would result in massive market outperformance. Although Taiwan Semi's stock has had an excellent run this year, it's up over 75%. That run can continue for years to come as its products are integrated into a world that has barely scratched the surface of AI capabilities. But before we proceed, here's a quick question for you. Did you know that the New York Stock Exchange is the world's largest stock exchange by market capitalization? Just a fun fact to keep you thinking. Next on the list is Alphabet, ticker GOOG, the parent company of Google. Alphabet has long been a proponent of AI, and while it appeared caught off guard by the surge in generative AI popularity in late 2022, its recent launches corrected that blunder. Its Gemini model emerged as a top pick. Alphabet has also integrated AI into various advertising products, allowing advertisers to create effective campaigns and ensuring that its internal models match the proper ad with viewers. While these releases haven't directly translated into a massive revenue increase, they solidified Alphabet's top place among the locations that advertisers must spend with. While Alphabet won't be as flashy an investment as Nvidia, it will steadily outperform the market by a couple of percentage points each year thanks to its dividend, aggressive share repurchase plan, and steady growth. The stock trades for around 25 times forward earnings, so it's not historically cheap, but it is substantially less pricey than many of its peers. Alphabet is more than just a search engine. It's a powerhouse in various technological fronts. For instance, Google Cloud has been making significant strides, contributing to Alphabet's diversification. The cloud segment has seen robust growth, driven by the increasing demand for cloud-based services and infrastructure. Furthermore, Alphabet's investment in AI-driven healthcare solutions through its subsidiary DeepMind showcases its commitment to leveraging AI for broader societal benefits. Another noteworthy AI stock is Salesforce, ticker CRM. A bit of a backdoor pick, as it's a customer relationship management software company. Salesforce is heavily pushing its AI model to its customers as a way to improve their businesses. It can be integrated internally to equip employees with the best information possible when completing a sale, thanks to heavy reliance on internal customer data. It can also create AI chatbots that provide better customer service interaction than has historically been available. Salesforce has been at the forefront of the digital transformation wave, providing businesses with tools to manage their customer relationships more effectively. Its AI platform, Einstein, is a game changer, offering predictive analytics and automation features that help companies make smarter decisions. For example, Einstein can predict customer behavior and suggest the best course of action, which is invaluable for sales and marketing teams. With Salesforce's market position, getting this AI offering right is key to maintaining its market dominance. It also provides another growth lever for the company, as its maturity is starting to show, with revenue only growing in the high single digits. However, it has recently initiated a dividend and still has a ways to go before achieving peak software company profit margins. The gold standard is Adobe's 30% margin. This all adds up to plenty of growth ahead for the stock, and it could be a long-term market beater. Salesforce's acquisition strategy has also played a crucial role in its growth. By acquiring companies like MuleSoft, Tableau, and Slack, Salesforce has expanded its product offerings and strengthened its market position. These acquisitions are not just about adding new products, but also about integrating these technologies to offer a more cohesive and comprehensive solution to their customers. All three companies mentioned, Taiwan Semiconductor, Alphabet, and Salesforce, are more steady than Nvidia, which has displayed a cyclical nature throughout its existence. Choosing Alphabet, Taiwan Semiconductor, and Salesforce is a smart idea if you're looking for more reasonably priced stocks with strong growth potential. Let's take a closer look at some interesting facts about these companies that you might not know. Taiwan Semiconductor is the world's largest dedicated independent semiconductor foundry, providing a wide range of chips to various industries beyond AI, including automotive, consumer electronics, and industrial equipment. Their cutting-edge manufacturing technology is ahead of most competitors, ensuring they remain a dominant player in the market. Additionally, TSMC's research and development capabilities are top-notch, continuously pushing the boundaries of what's possible in semiconductor technology. Alphabet, aside from its dominance in search and advertising, is also a leader in cloud computing through Google Cloud. This segment has been growing rapidly, and its AI capabilities, like TensorFlow, are widely used in the tech industry for developing machine learning applications. Alphabet's diverse business model helps mitigate risks associated with over-reliance on any single revenue stream. Moreover, Alphabet's commitment to AI ethics and responsible AI development sets it apart from many competitors. Salesforce, known for its innovation in CRM, has been expanding its product portfolio through strategic acquisitions like Tableau and Slack. These acquisitions enhance its data analytics and communication capabilities, making Salesforce a more comprehensive solution for businesses. Their focus on integrating AI into these platforms is aimed at driving higher efficiency and better customer experiences. Salesforce's dedication to sustainability and social responsibility also makes it an attractive choice for socially conscious investors. Now let's dive deeper into the pros and cons of investing in these stocks, starting with Taiwan Semiconductor. The pros include its leadership in semiconductor manufacturing technology, strong growth projections in AI-related revenue, and its critical role in the supply chains of major tech companies like Apple and Nvidia. However, potential cons include geopolitical risks associated with Taiwan, competition from other foundries, and the cyclical nature of the semiconductor industry. For Alphabet, the pros are its dominant position in search and advertising, strong growth in cloud computing, and continuous innovation in AI technologies. The cons might include regulatory scrutiny and potential antitrust actions, high valuation compared to some peers, and dependency on ad revenue which can be affected by economic downturns. Salesforce's pros include its leading position in CRM, strong track record of innovation and strategic acquisitions, and growing integration of AI into its product offerings. On the downside, Salesforce faces challenges such as intense competition in the software industry, relatively high valuation, and the need to maintain high growth to justify its market price. Now let's take a closer look at this comparison chart, highlighting some key metrics for Taiwan Semiconductor, Alphabet, and Salesforce. Taiwan Semiconductor, TSM, has a current price of $187.35 and a market cap of $972 billion. It generates $69.35 billion in revenue and maintains a solid gross margin of 52.08%. Additionally, it offers a 1.1% dividend yield, providing a nice bonus for investors. Alphabet, Google, stands strong with a current price of $186.78 and a market cap of $2.308 billion. Its revenue is an impressive $307.16 billion, accompanied by a robust gross margin of 57.19%. Although it doesn't offer a dividend yield, its aggressive growth and strong financials make it a compelling choice. Salesforce CRM is priced at $253.97, with a market cap of $246 billion. It brings in $34.86 billion in revenue and boasts the highest gross margin of the trio at 67.99%. While its dividend yield is a modest 0.3%, its innovative approach and market leadership in CRM software highlight its potential for long-term growth. These metrics clearly demonstrate why these companies are excellent alternatives to Nvidia. They offer a balance of strong financial health, growth potential, and in some cases, dividend income, making them solid choices for anyone looking to invest in the AI sector. In summary, while Nvidia has been a star performer in the AI stock arena, the expectations for its future performance are incredibly high. Considering alternatives like Taiwan Semiconductor, Alphabet, and Salesforce, could offer more stable investment opportunities with strong growth potential. Each of these companies is well positioned to capitalize on the growing demand for AI technologies, making them worthy contenders for your investment portfolio. Now, as promised, here's the special bonus tip. Keep an eye on emerging AI startups. These companies might not be as well known as the giants discussed, but they often drive innovation and can provide significant returns on investment if they succeed. One example is C3.ai, a company specializing in enterprise AI software. They've partnered with major firms like Microsoft and Adobe, positioning themselves as a strong player in the AI space. Before wrapping up, here's a quick thought-provoking question. What do you think is the most significant factor driving the stock market's growth in the AI sector? Share your thoughts in the comments below. Thank you for watching Simple Investing Secrets. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more insightful content on investing and financial growth. Remember, this video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. See you in the next video.